when Bitcoin, currently around a $1.2 trillion asset category, continues to expand, over what period of time, and as private capital allocators, we're looking at the next decade, Bitcoin could have material returns in the near term, but there's going to be diminishing marginal returns that occur to it. And there's going to be periods where it's flat for a long period of time until it starts to expand into a new category. So if we have companies where they can be growing and they can be growing significantly, and they're going to be at early stage valuations, and their economics are tied to growth in Bitcoin, there's a lot of opportunity that we see there. There's going to be many multi-billion-dollar companies that emerge out of this infrastructure. And when we're investing at sub $10 million valuations in early stages, there's a very high potential for return on those types of investments.
Hi, Eric. How are you?
I'm doing great. It's a beautiful morning out in Denver, Colorado, where I'm based, and excited to talk about all of the different financial topics around Bitcoin. How about you?
I'm good. Thanks for joining the show. Can you please present yourself to our audience for people who don't know you?
Yeah, so I came from the traditional finance world and moved into focusing all my efforts on Bitcoin and the venture capital side of the industry. I started off actually kind of at the other end of the spectrum from venture capital within the distressed world, where I was working in corporate restructuring. And I worked for one of the largest firms in the world that would provide restructuring advisory and financial services to companies that were undergoing challenges. I then moved to a private equity firm that specialized in acquiring distressed corporate carve-outs. All the while, economics has always been a hobby of mine and a passion that I followed. And when I first discovered Bitcoin, I wrote it off as a speculative investment with no fundamental value. I listened to what I'd learned in school. I listened to what I was taught in the CFA curriculum, and I failed to understand the reality of the technology. And a lot of that was because when I first heard about it, it was pitched to me as a blockchain technology. I'm like, well, what is a technology that isn't producing cash flows I can measure and get to some sort of valuation on? It wasn't until I understood that we have this synthetic monetary commodity that's emerging for the first time in centuries, that everything started to click to me. I was like, oh, okay, this is an alternative type of monetary system. At a minimum, it's the most scarce commodity in the world. And somewhere within that spectrum of range of outcome is where it's heading. And these are massive market sizes. And that's something that's going to change so many different variables within finance to be able to permissionlessly send a scarce asset around the world at any moment's notice. So it was around 2020 when I decided to focus completely on this industry. And I think a lot of that was, at the time, things are very different now. But at the time, I felt comfortable enough that the network had expanded so far that it was no longer a stoppable network anymore. And I said, why am I not focusing my career on this? I've always been against central banking and the manipulation of interest rates as a pricing mechanism. This is a solution to the biggest problem in finance, which is a history of moral hazard littered throughout cycles of credit expansion and crashes. So why am I not doing everything in this industry? So I started with authoring a book that I geared towards people that came from my background, and not just completely focused on the economic historical side, but getting into the history of central banking, banking itself, which is a very long and detailed history, but I provide some summary discussion of what that is, and then getting into the technical aspects of Bitcoin. I think similar to when I was first learning about Bitcoin, similar to how I had to understand a company in my prior job, I had to model out the entire company. I had to model out the capital structure. I had to look at every last detail of what the headcount is. And looking at Bitcoin, I needed to understand the code, and I didn't have a computer science background. So I taught myself how to code and did some of the programming textbooks. One was by a guy named Jimmy Song. That gave me a very technical understanding of Bitcoin. And I learned from that there's a lot of ways that I could summarize that information for a financial professional in a coherent sense. For people that are serious about understanding, it's not the easiest read, but you don't know how to learn. You don't need to learn how to code to learn some of these topics. So I included that at the end of my book, and then a general discussion of Q&A, and tried to answer all the most salient questions and topics that I encountered in my experience understanding Bitcoin, and I think a lot of financial professionals do. So that was the book, and then kind of getting me to where I am
What's
today.
the
It
name
was
of
about
your
a year
book?
ago. Oh, sorry. The book is called The Seventh Property:
Okay.
um, Bitcoin and the Monetary Revolution.
So why is
So
it
you can find that on
seventh?
Amazon. So that's one of the big theses of the book, is that, generally speaking, there's about 6 monetary properties that have been accepted, and the brain trust of economic theory that will be properties of an adoptable form of money. And I think
It's
the
like
innovation,
divisibility, uniformity, scarcity.
scarcity, yep,
Yeah, okay. And
yeah,
then you have
exactly.
a seventh. What's the seventh one?
Yeah, so the seventh property is immutability. That's
Okay.
what Bitcoin introduced to monetary properties that really didn't exist before. Is that now we can take not only all these great monetary properties, we can use a much more efficient form of money, and we can have an immutable supply schedule. That's what's novel about Bitcoin. And if any other money is being produced in the future through some sort of private mechanism, we should always be assessing it from, well, does it have an immutable property? That is a superior form of monetary functionality. It gives us more certainty over what the future supply is going to be.
Okay. And then after the book, what did you do?
So I spent a lot of time just working, advising, speaking at conferences, and learning more about the industry and talking to different people. I think when I first got into all of this, the private capital side of the industry was always compelling to me, but I thought it was a bit premature. And it was around the beginning of last year that I realized there's enough infrastructure that's built, and I view Bitcoin at this inflection point to where the private capital side is going to start growing very significantly, and that's when I set off to form a venture fund that's focused on Bitcoin companies, which we can
So
get into
beginning
how I
of
define them.
2023.
Yeah, kind of like middle of 2023.
So when Bitcoin was at the lowest after
Yeah,
the FTI.
yeah.
Not a great timing to start a VC Bitcoin focused fund.
Yeah, I mean, broader VC has been a challenging fundraising environment as well.
Yeah.
It's kind of just across the board, not great for fundraising. But this is this is where the diamonds are made, and the valuations are much better in these types of environments. So there's plenty of volume that we're seeing, but yeah, nonetheless, the fundraising environment has not been ideal, particularly compared to 2021, where crypto venture fundraising was the number one fundraise category in all of venture capital.
Okay. And why Bitcoin, not crypto?
So, I mean, there's a short answer and a long answer. I think the long answer is a much more technical discussion, but the short answer is that there whether you believe that there's going to be multiple cryptocurrencies, or there's only going to be a very dominant form of private currency that emerges. If you don't believe in either of those things, then you have some reading to do. But if you're in one of those two camps, then what really matters is that out of all the different cryptocurrencies that exist, Bitcoin is over 50% of the market capitalization and fluctuates to higher extremes towards 70% range of those. And there's a lot of inflated supply in there. It's probably significantly higher than that. But nonetheless, Bitcoin is the most dominant form of collateral asset within this ecosystem. It's the most dominant monetary asset. There is a very large gap in the amount of private capital funding that has been built on infrastructure and core technologies to support it versus broader crypto. And one of the most dominant incentives for why that exists is that you can't print more of Bitcoin. And the proliferation of the crypto market has been to take a monetary asset, have control over it, print more of it, and use that as a customer acquisition vehicle within your portfolio companies. But more importantly, the venture investors that are owning those tokens are boosting their IRRs by being able to make distributions very early on, pre-product, oftentimes pre-revenue from companies that don't have any value, but most of the capital invested is being expended on marketing within these companies. So there's that incentive. It's not all based on that, but that's a very strong incentive. And I think that that attracted much of the initial venture funding that went into that side of the industry. That's all being found out now. People are all realizing what game's being played. And, when the music stops, everyone's going to say, well, what is actually the valuable monetary technology? And I think it's indisputable that that's Bitcoin at this point. And we see a huge opportunity where there's a void in the market for the amount of private capital that can be deployed around Bitcoin as core infrastructure.
Okay, that sounds interesting. So your VC fund, I don't know if it's disclosed, but how much did you raise? What capital did you deploy so far? What's like a couple of bulk figures you can share with us?
Yeah, so we're still raising. We kicked off fundraising this year, and in terms of size, we're targeting it's a smaller fund to start. We're targeting very early stage, around the 20 million. We're looking at check sizes in the hundreds of thousands to low seven figures. There's are those kind of the details that you want, or is there
Yeah,
other?
but basically just rough figures, basically about what you're trying to do.
Yeah.
And I would say most importantly, how do you view investing in Bitcoin equities? I mean, we are operating a Bitcoin equities ETF, and so we invest in listed Bitcoin equities, and we struggle to find a lot of companies listed that are building on Bitcoin. Where do you see the future champions or big potential market disruptors that could add value to the Bitcoin network?
So, are you referring specifically to public equities in that question?
No, like I'm referring to the private Bitcoin companies you're gonna target once you have
Yeah.
raised your fund.
Yeah, so and then on that point, we have made investments through warehouse investments that are rolling into our portfolio once we close on the fund. But I think that the way that we view what is going to be a successful technology is we're primarily targeting core financial infrastructure and services that are using Bitcoin, ideally in a novel way where you can't replicate that in the traditional finance system. You have to do something like this on Bitcoin. Examples of what that would be are very basic financial functions, custodial services, exchange services, lending. There's a huge void in the lending market after 2022. Insurance products, there's a massive underpricing or overpricing of risk from traditional insurance providers, and bringing in direct underwriters who understand how to actually appropriately price risk within this industry is going to be a very valuable business model. And, we're looking at a lot of these types of functions and saying, well, a lot of people want to use Bitcoin for long-term forms of monetary adoption. Is it going to be full money? All these things. And while we believe in that long-term vision, we're decades away from actually getting there. And we want to build on, we want to allocate capital to the businesses that are building on or building the infrastructure that has access to the most demand today. And that's basically around Bitcoin being a store of value, Bitcoin being a form of collateral. And you can use it in all these novel ways from that perspective. Our very first investment was in a remittance provider that uses Bitcoin to settle collateral on the back end network and allows people to make dollar payments much more cheaply, much more efficiently. It circumvents this patchwork global banking system that's highly intermediated with a litany of fees just to send money from the US to India. And this company is looking at targeting that market, which is the largest market in the world for remittance payments. And there's a lot of creative destruction around basic financial services that can emerge just by using the network of Bitcoin as a tool. So we're looking at things like that.
Okay. And as an investor, how do you compare holding Bitcoin versus holding a Bitcoin company, basically, or a company building on Bitcoin? I find it quite challenging to do one rather than the other, in the sense that if you're going to go and you get convinced about Bitcoin becoming a global store of value, then the potential upside on Bitcoin itself is massive. And when your reference currency is Bitcoin, then all these Bitcoin companies have to provide much bigger returns compared to traditional VC company, which their reference currency is the US dollars. So why would one put money in Bitcoin companies rather than Bitcoin itself?
Yeah, I think that's the most important question. There's a lot of points to say on this. I'll start with we never advise people to invest in our fund unless they already have a position in Bitcoin, particularly self-custodial Bitcoin, which is, I think, some of the best insurance you can have against the financial system today. Um, I think on a risk-adjusted basis, it's going to be very challenging to outperform Bitcoin, and we're not providing any sort of assurances or idea that that would be possible. Um, but that being said, there are ways to get exposure within the Bitcoin ecosystem through the private capital side that could be very significant in what their return potential is. And I think that the way that we think about that is that there's kind of there's like three primary buckets that we want to look at. So if Bitcoin grows rapidly, then what are the indirect effects of that on companies that are supporting it as forms of infrastructure? A lot of these companies have revenue economics, they have balance sheet, and thus, a degree of operating leverage or financial leverage that they're applying that allows them to grow with the prospects of Bitcoin. And they can also start at a much lower valuation. When Bitcoin, currently around a $1.2 trillion asset category, continues to expand, over what period of time, and as private capital allocators, we're looking at the next decade, Bitcoin could have material returns in the near term, but there's going to be diminishing marginal returns that occur to it. And there's going to be periods where it's flat for a long period of time until it starts to expand into a new category. I'm actually writing a paper going into the detail around what we see on that. So if we have companies where they can be growing and they can be growing significantly, and they're going to be at early stage valuations, and their economics are tied to growth in Bitcoin, there's a lot of opportunity that we see there. And I think that there's going to be, many multi-billion dollar companies that emerge out of this infrastructure. And when we're investing at sub $10 million valuations in early stages, there's a very high potential for return on those types of investments. And the other thing is that you can get exposure to different aspects of growth that you wouldn't normally with Bitcoin. Directly, we can have user growth as that comes in. There's estimates anywhere between 40 to a few hundred million people that exist and that have adopted Bitcoin in some form, and their degree of adoption is arguably pretty low. That's going to expand very materially. I think we're getting to an inflection point where the social proof around Bitcoin is nearly all but validated, and user adoption is going to hit an S curve growth. And having businesses that are focused around that, I think, are going to grow massively. So if we're talking about companies that are addressing, from a private capital perspective, arguably the largest market in the world, the market of money, the market of Bitcoin, which is superior in that form, and we expect them to be growing in a similar manner alongside that. So, there's a lot of other things I can say around that too.
Okay, and how do you explain the fact that the Bitcoin ETFs attracted billions of dollars? The crypto VC funds attracted billions of dollars, But the Bitcoin VC funds are like in the hundreds of millions. Maybe if you add them all, you get like to a 1 billion tops. How do you explain this huge discrepancy and this a huge lack of interest from investors to Bitcoin-focused VC funds?
Well, I would say the first thing is that should be on every investor's mind is this question as to why there would be such a large void for something that's such a valuable asset. And I think that writing off a category because there's already historical data against its demand is a foolish thing to do as an investor. Digging a level deeper and trying to figure out, well, why has that occurred? From a Bitcoin ETF standpoint, that makes a ton of sense. I mean, private capital is expensive. Private capital has arguably the most material solvency risk of any form of investing at the earliest stages. And it's more, there's operating leverage, there's financial leverage being applied to these types of investments. Bitcoin doesn't have that. Bitcoin doesn't have solvency risk. And it doesn't have financial leverage unless you apply that to it. I think it makes perfect sense why the Bitcoin ETF is so successful. I mean, we're talking about an asset that is growing faster than any other asset from a compound annual growth rate historically since its inception. We're talking about an asset that has the highest Sharpe ratio of any other asset category right now. And the fact that I'm actually amazed that it hasn't achieved more growth or the ETF launch, despite being the most successful launch in ETF history, wasn't more successful because all these financial managers around the world right now have to ask themselves, well, if if I believe in Markowitz theory and I believe in modern portfolio theory, then it's my job as a fiduciary to achieve the most optimal risk adjusted allocations for my clients. Full stop. That's your job. And if you're missing anything that's material in that category, AKA $1 trillion asset class, it's highly liquid and global, and it has the highest risk adjusted Sharpe ratio, Sortino ratios out of any other asset category, and you're not including that in your portfolio, that's a failure of your fiduciary duty. So the argument makes a ton of sense for having Bitcoin. I don't doubt that. Our time horizon of investment is much different. And I think to the point I made earlier on crypto, their time horizons are much more short term. That's been largely a vehicle to boost return distributions by leveraging tokens for seigniorage and false marketing. It doesn't mean that there's not plenty of legitimate use cases and ideas that have emerged within it. But the vast majority of the incentives for capital allocation were we can effectively take advantage of public monetization without having to go through securities markets. And funds, a bunch of capital was attracted to that. Look at where they are now. All the capital that flowed in during 2021, Tiger Global had a 97% markdown on its OpenSea investment, which was the golden child of the last NFT cycle. All these guys got burned from this. And a lot of the VCs aren't the ones who got burned. A lot of the people who got burned were just general retail that the VCs sold to when the timing was right, because they're the ones that created the euphoria in the first place. This whole industry is littered with fraud. And I don't think that, there's a lot of blood on a lot of people's hands. But I think the reason that Bitcoin has been under allocated to historically is because it has a much more long-term economic incentive approach, and the amount of infrastructure that needed to be built around it for it to produce the outcomes that crypto took a short-term approach towards. I think that that's now at an inflection point, and that's why I see a ton of attractive opportunities emerging. A similar thing was happening during the emergence of the internet. We had IP addresses and different types of protocols that were either going to be used by private capital closed networks, or we were going to use these other long-term networks. And throughout the process of the basic internet stack of IP addresses and HTML and all these other basic protocols that everybody uses today when they log onto their computer and open a browser, that emerged over decades. Meanwhile, we saw the rise and fall of all these different private closed networks, like from companies like Xerox, from companies like Apple, from all these major companies, IBM. They all try to create their own standards that they could monetize and they could have a fee around. And I view Bitcoin as the open protocol that's not controlled by anybody. And it's going to take a lot longer for that to happen. But I think that for specific use cases, we're at an inflection point in the Bitcoin ecosystem. And that's what I think we're right about and everybody else is wrong about.
Oh, I like the analogy of the internet. It's the first time I hear it. I tend to believe that people are more focusing on Bitcoin as a store of value, and that explains the ETFs, like you describe it, like from a financial investment perspective. But they're not very interested at this stage, and I believe this is where the arbitrage opportunity or the investment opportunity lies in what the technology brings and the mean of exchange, basically part of Bitcoin, that VC fund like yours will fill the gap into boosting the companies that are gonna develop the layers to build up on this technology instead of just holding it as a store of value.
I agree. I actually think though, because I wholeheartedly agree with you on the store value phase. And to the point I was making earlier, we want to focus a lot of our allocation around that. It doesn't mean that we don't see, I would call it maybe like a quasi medium of exchange type use case where people can leverage the efficiencies of the network for moving value, but they're not going to be using Bitcoin as a direct medium of exchange at scale. Like, people are using it as a medium of exchange in certain respects. People are using it as a unit of account in certain respects. It's a very, very early adoption cycle with a very long tail in the beginning. And the adoption cycle for both of those functions is predicated upon it growing as a store of value. Because as it grows as a store of value, it's a self-fulfilling prophecy where the markets become more mature, the credit markets around it become mature, the derivatives markets around it become mature, the volatility starts to go down, the markets get more deep and liquid, more people actually own it, so it's easier to accept and disperse. And then a lot of that's going to happen. And I think we're still, 5 to 10 years away from reaching any sort of legitimate inflection point around medium exchange adoption. But where we see that inflection point today is in the store of value phase. And the ETF was a massive catalyst and form of social proof around that. And I think that businesses that view Bitcoin as a store of value, like my example with like a lending business, lending is out of all the different market sizes from the last cycle, we know that lending has achieved some of the largest on the private capital side. And there's legitimate lending solutions that value Bitcoin as a superior form of collateral. It also allows people to hold it for a long period of time without triggering any sort of tax consequence. So there's this perennial demand that exists around those functions. That's a market that grows with the value of Bitcoin growing and the volume of loans that exist. That's a really compelling type of business that to invest in while Bitcoin continues to monetize as a store of value.
Okay. One other thing I wanted to ask you is the valuation perspective. When you value a Bitcoin company, how does it differ compared to any other tech company or VC fund type of companies? What are the things that you look at, and what kind of business model do you apply? And does the performance of Bitcoin itself come into the valuation process?
Yeah, that's a great question. I'll start with the first thing is that with a lot of the investments we're looking at are very early stage. I mean, the honest truth is that valuation is much more of an art form at those stages. You have to, kind of put your finger in the air and you have to look at certain characteristics and say, if this isn't producing any cash flow today, but prospectively could, What is that? I think what we're really trying to look at in those types of situations from a valuation standpoint is if we assume that this proposed valuation exists and we do expect this company to grow, then what are the capital resources required to get them there? Is their plan and their roadmap to get there aligned with what we would expect the reality of those capital resources to be? And if so, how diluted is this initial position going to get? And ultimately, what is our internal rate of return going to be on that type of
Yeah, but that's not Bitcoin specific. That's like any VC fund would
Yeah, of
look at it that
course.
way.
Yeah. I think that with the Bitcoin specific dynamics, it depends on the business. But we can, from a revenue economic standpoint, you would model in the Bitcoin price changes and how that would impact the business. A lot of businesses that we look at will have a Bitcoin treasury of some form. So that'll impact their balance sheet and looking at different scenarios and what the solvency risk could be. Um, that's an important aspect of it. I
Yeah,
think,
because you're building on a volatile asset, so you have to be resilient in
yep,
tougher times, basically, I suppose, right?
right.
Yeah, when you look at the listed market, I mean, some valuation just doesn't make sense. If you look at MicroStrategy, for example, that is trading at 2 times its book value, even more sometimes. Don't you think there's a valuation premium on the listed Bitcoin equities compared to the private Bitcoin equities, whereas it is
Mm.
the opposite when it comes to public equities versus private equities? Like we have seen in the past years, valuation rising to very high values in the PE market, private equity market, compared to the listed market. But I feel like it's the other way around in the Bitcoin equities market.
So I guess my opinion, a lot of these, I don't think that really any valuations make much sense anymore. I don't know if we have enough data points if we have enough data points to, in a very significant way, say that that would be true. But yeah, I mean, I have a general sense that could be the case, but I don't follow the public markets for a lot of Bitcoin equities very consistently.
Because one wrote basically that a lot of what we have observed basically is companies raising capital, or Bitcoin companies raising capital by going listed very sooner than you would have expected from
Mm.
private companies in the tech space or AI or whatever. All the Nasdaq components basically have went to the markets after several rounds and several VC and PE funding rounds, whereas Bitcoin companies, they tend to go much quicker to market because this is where they have a better access to liquidity and to financing.
Would this be dominated by the mining companies?
Yeah, for example, yeah.
I would guess that a lot of that is a product of the prior market cycle where, in a bout of desperation, they needed to go to the public equity markets probably prematurely and at less favorable terms than they'd hoped.
Okay, I see what you mean. Okay, I'm done with my questions. Do you have anything you want to add to our audience? Some points we haven't raised, or some elements you think of interest?
Yeah, some good questions. We covered a lot of good material in this. I think, yeah, if you're involved in this industry, interested in getting involved in this industry, feel free to reach out to me. I'm most active on Twitter at my name, ERICYAKES. My company's website, if you want to learn more about it, is epochvc.io, epochvc.io.
And perhaps your book and where we can buy it.
Yeah. You'll find my book on my Twitter profile, but it's called The Seventh Property, and you can buy it on Amazon.
Okay. It was nice having you on the show. Thanks a lot for answering my questions, and hope to hear from you soon.
Yeah, likewise, Jad. Thanks, man. Appreciate
Take
it.
care.